So what are the charts saying as we head into one of the weakest months for stocks historically? The Chartmaster says, wake me up when September ends. Head over to the plasma.
The charts reflect what you have just been hearing, which is there's a great debate raging. We have perfect equilibrium. Equilibrium represents a standoff between those who like and those who don't like, meaning bears and bulls. But it's not a malaise, right? It's not calm, it's sharp indecision. There's a huge debate going on, and all debates come to an end. And the more violent the debate, the more violent the resolution. It's just sort of how life works. Let's look at a few charts. So we have this well-defined range. It's the month of August, but it's not a calm thing. It's highly volatile. So take a look at the following charts that follow. We have had a succession of 2- and 3-session drops, 4%, 4%, 3.5%. And then we've had the opposite. We've had quick recoveries of almost the same duration, up 4.3, up 4, up 3.7, each lasting 2 to 3 sessions. So this violent debate. And there's an adage from the 1930s. It says sharp indecision is resolved sharply. Meaning there's a big debate and it's going to be big. Somehow there's a trade resolution and up it goes. Or, of course, the earnings all come out flat. There is no trade resolution and the thing down it goes. And you can make your bets accordingly. That's what makes it so fascinating, what makes the conversation on the desk so relevant. But the levels to watch, 29.45, 28.25. It is basically about a 100-plus point range. In fact, you'll see it here, 120 points. Now, were we to break to the downside, that's my thesis, what you have is a measured move. You take the width of the range and you project down. So 120 points down, I've got the arrow here, which you can see, and 120 points down would take you to essentially the 2705 level. Now, what is that level? That's just slightly below where we were in June. So the June 1st low, just to put this in context, right, is 27.28. And it is not random that all of this consolidation is happening under the line. We're stuck here. So you break, you consolidate, and again, the bull would say it's going to break back above. My premise is you get the second break in the direction of the primary break, and that basically we're going to approach and violate the June low.
Carter, why don't you come back on over as we digest
What choice does he have?
Well, we could just keep him there until away.
You know, Carter's a lot of things, Mel, but he's not an American idiot. And I like a lot of, Dan, did you catch that?
Yeah, wake me up when September ends.
I like a lot of things that he said. And, you know, we get criticized a lot. You're always so negative. But, you know, we're trying to point out some of the things that can go wrong. And I got to tell you something. The warning signs are all there right now. The fact that the market goes higher, it is what it is. But it doesn't mean it should be going higher. Again, the warning signs are in place. And quickly about the American consumer, I know what Jeff is saying. I say this a lot. I'm not suggesting I'm right. But don't confuse the health of the U.S. consumer with the strength of the U.S. consumer, because they're two entirely different things. The U.S. consumer will spend money into oblivion as long as they feel good about things. And they feel good about things when the stock market goes up every single day.
Yeah, we're also seeing a trade down. Dollar General, Walmart, Target. Right, that's fantastic. But you know what wasn't great? Tiffany wasn't great. Williams-Sonoma, Capri, Tapestry, auto sales, home sales are topping out. So those, to me, are the focus on the U.S. consumer that I want to
highly defensive. I mean, Dollar General, that's literally Walmart. It's paycheck to paycheck stuff. The things that should be prospering are not.